I think this is our cue to get started, right? Well, good afternoon, everyone. We have a very good panel here representing new digital banks, some traditional senses behind some of the banks as well, but more importantly, representing 4 countries. So we have Indonesia, Vietnam, Philippines, and Singapore. So it's going to be quite an interesting aspect with respect to profitability or whatever the metric we might choose to look at the long term. To kick off the panel, I wanted to ask all of the panelists, perhaps from you, Siume, on dispelling some myth about the digital banks or anything untold that you would like to tell the audience.
Right, Saraf, thanks for having me. On digital banks, some say digital banks can't earn money without losing money or can't make money without losing money. Right, so I've heard it a lot even before taking up this role that, from clients that digital banks are more vulnerable to security threats, losing clients' money, shutting accounts without rhyme or reason, and also doubts casted by these business leaders who say that digital banks won't make money unless they lose money. So in my opinion, personal opinion of course, would be that if done right, if done well, digital banks would be paving the way to financial inclusion as well as security in digital financial services. And all SMEs will be empowered with new growth opportunities when the new digital banks craft out a framework that would have deemed them credit-worthy in the new system, right? Otherwise, they would be deemed uncredit-worthy in existing systems. And we can all do this in a way which can make a lot of business sense.
Okay. Xiaoshen, maybe you want to follow up on that?
Yeah, a myth. I think one that maybe a lot of people think about is that the way for digital banks to win is to compete on the basis of better value, and value in terms of better rates, lower fees, and that would be the way for digital banks to win. I think that's a myth. I think initially perhaps there might be more competition on the basis of value to gain customers, but over time to win more sustainably, I do think the basis of competition is going to be around customer experience. And the good news, I think, for digital banks, we've been looking at this actually across the world in looking at what we call the Net Promoter Score, or NPS, which is a measure of customer advocacy that Bain & Company developed about 20 years ago. And actually consistently across many markets, the new players tend to actually perform better on the NPS score versus traditional incumbent players. And I think if digital banks and also incumbent banks can make that the real basis of competition, that becomes a much more sustainable way to win into the longer term. So that's maybe one myth that I like to dispel.
Okay. Anish?
Firstly, thank you, Saurav and SFF for having me here. With your permission, if I can just quickly start introducing UNO a bit. So UNO Digital Bank is one of the 6 licensed digital bank in Philippines. So what is UNO? UNO can be best described as a full spectrum credit-led bank. What does that mean? It means that we provide one trusted interface to meet all your life's complete financial needs. That is save, borrow, transact, protect, invest. I'm also happy to share that we publicly launched at Philippines FinTech Festival 2 weeks back. So now on the myth, let me talk of something from the consumer perspective. So one of the biggest myth for an end user is about the non-personal experience which they interface or they think they will interface from a digital bank. My view on this is that it completely depends on the strategy of the banking organization, just like any other businesses, how much you want to engage. For us in UNO, we have taken a very conscious and strategic call in putting together a humanly backed contact center, which we call Customer Happiness Center. Because we felt that personal experience is very, very key, especially in emerging Asia, emerging markets. And people are not yet ready to kind of transition from branches, from a lot of interaction to completely interacting with with technology box. So I would speak of that as one of the key myths.
Thank you. Kareem?
Yeah, first of all, thank you for having me in the SFF. Bank Jago, just a little bit about Bank Jago. Bank Jago is an Indonesian tech-based bank. We aspire to enhance the growth of millions through providing life-centric digital financial solutions. We have Sharia and also conventional services. The myth is, because Indonesia is quite fast as a country, for us the myth is that digital bank is only for the younger ones, which is more the tech savvy. Yeah. But actually for us, we should not be constrained by that. That is why we call Jago as a life-centric bank, focusing on making it life easy, focusing on not bank processes, but actually the processes have to make it easy for the customer. And we can see that more and more the demographics of the age of demographics is creeping higher and higher. And because of that, the trust is getting also better for the, I would say, older, like me, generation. Because if you see the pockets of funding, the older or the higher in terms of the demographics, clearly the funding is higher there. And that is what we also then aim to go, because from there we can then go on and be self-sufficient in terms of the funding without going to like more expensive time deposits, etc. So we have to break that myth that digital banks is only for digital savvy, which is more the younger generation.
But I guess a lot has to be done on customer experience then.
Yes.
But probably we'll come back to that. Darren?
So thank you for having me also. Maybe let me take a slightly different tack. I'm going to say something that's a little bit different, and that is that traditional banks also are very capable of learning new tricks. And so, you know, I've been in traditional banks for 35 years. I can tell you that as early as 2005, in a traditional bank, we were able to put live into a market, and it was a big market, a mobile phone-based fully digital, unsecured loan proposition that from the start of applying on the mobile phone to the cash being in your bank account of choice took on average 17 minutes, 2005. Traditional banks have been trying to really focus on what you said, customer journeys, and delivering very targeted solutions on seamless customer journeys. Traditional banks haven't always been so good at it, and where fintech has been great, has been coming in and taking specific pain points and saying, hey, look, there's a better way to do this. There's a more seamless, intuitive way to deliver a solution or a service or an experience to banking clients. But that doesn't mean to say that traditional banks can't learn these things, and they are. And so the competition between all is actually very healthy for the consumer.
So all of you actually have a long history in banks. There's collectively on the stage over 100 years of experience without letting away anybody's age. So maybe, Sumay, you could tell us what's different.
I would think that it's the humans of ANEX that is different, right? And humans of ANEX is actually a term coined by one of our colleagues. And it has since stuck on, and it has served as a soft reminder to tell us that digital banking, technology, they are all cold and functional. Humans are very much needed to give the human touch, to focus on the customer experience, to bring about the proposition that the SMEs will be looking for, right? Critically, in ANEX Bank, what we are looking at are partnerships in a very open and collaborative approach, discussing with the industry and domain experts to understand exactly the pain points that is going on in the industry and the customers, and then embedding our lending services in those platforms that they are selling on or trading on or working on.
Darren, I hope you're taking notes. Manish, what's different in traditional banks to what you have just built?
Actually, there are quite a few. I've worked 25 years in a traditional bank and now 2 years setting up a digital bank. So I wouldn't go into much detail into what Sumi already taught about ecosystem and partnerships, but that is very, very critical. The whole approach of how you work on an ecosystem is very, very different how a traditional bank looks at it. But let me talk out here on two other aspects. One is obviously around technology. The whole mindset about creating something from scratch is very, very different in the way a traditional organization looks at it. It's cloud native, agile, build very quickly, willingness to learn, fail, test, pivot. Again, giving our own example, we have just been 9 months, but we already made a change in the technology. In my previous organization, this would have been a 5-year project. So that's very, very different because you can't predict what exactly the future would be, what exactly is the customer need. You can do all your analysis, but you have to be ready to kind of pivot. So that's very, very different. The second thing which is different is cost. And it is very important for this discussion because I'm sure we will discuss about the profitability. She mentioned that as a myth, and that's definitely a big myth, I agree. In a digital bank, you are able to do things, or at least I can talk our example, things in a fraction of cost, which possibly would happen in a traditional bank. And there are various reasons for that, because you take quicker decision, you're able to work with startups, you are able to leverage on open finance. And putting this all together, it makes a significant difference at the end.
Okay. Kareem.
Yeah, I'd like to add to what has been said previously, because to me, is it different? What is different? Actually, nothing is different because banks are banks. So that is what I call the what. The what is still the same. As a bank, there's risk management, compliance, etc. But what is really changing is the how. I'd like to add to, let's say in Bank Jago, what is the difference in the how? It's actually combining, people always talk about fintech, it's combining the banking side and the technology side. These two come from really opposing views. This one is very, you have to make sure that the cost is very effective, etc. Whereas on the tech side, everything is fast. Now, to be able to then become a good digital bank, to me, is actually how you can manage and combine the good side of both worlds. How do you do it effectively? And this relates to later on to talent, to actually capabilities, to actually how you actually build the culture of your organization, because at the end of the day, that is what matters. If you have a good culture and good capability, this culture can fuse both sides, banks and technology. And also one thing, because like you mentioned, we're kind of old here, but in a digital bank, the older definitely needs to work with the younger. So you have old, young, and bank and engineering. So this needs to integrate.
Darren, I hope you've been taking notes. So they just said that traditional banks are non-collaborative. They said there's a lot of legacy and cost. And they said that you've got bad culture. I'm sorry, I'm putting you on the other side of the table, but our fintech's going to eat your lunch and dinner.
Well, first of all, the traditional bank that I'm working for right now is only 29 years old. So it's not like it's one of those 200-year-old monoliths, okay?
I agree, it's all relative.
No names. But look, are they going to eat our lunch? No, I don't think they're going to eat our lunch. I think actually where traditional banks have been very slow, but they've been slow for a number of different reasons. They're highly regulated, infrastructure, capabilities, governance, and all of these types of things have kind of been there in banks. That's been their disadvantage. It's also, to an extent, been their advantage. The advantage is it's a barrier to entry for many. There's a high cost of compliance, et cetera, et cetera. That also gives consumers and customers a certain sense of trust. When there was recently a little liquidity issue in Vietnam, well, money wasn't rushing to Momo. Money was rushing to Techcombank, Vietcombank, the big, strong, solid, established banks. But where banks have been really slow, and what the fintechs and digital banks have been teaching the banks, is you have so many assets, use them more sensibly. Data. Banks have had tons of data forever. They've only used it for risk purposes. Now we're not using it for risk purposes. We're really using data to better understand our customers. No different to how digital banks are using data. And we're getting very good at it. And we have a lot of it. And that data is hugely powerful. what you said, Kareem, about technology is also critically important. Platforms, ecosystems, also critically important. So if a bank is able to adjust and bring in partnerships, bring in ecosystems, harness new technology, which we're using AWS in the cloud here in Singapore. We're deploying Salesforce as our CRM. There's a whole bunch of stuff that's gone into our digital capabilities. 2,000 people of our 12,000 people are focused only on data, digital technology, strategic initiatives at the bank. That's a lot of investment and capital going into a traditional bank to make sure that we can compete long into the future. The competition is good. The best will win, as in all good competitive environments. But we're going to be there.
It's going to be a tough fight.
If I can add a comment to that.
Of course.
I think one of the data is important. Data is there. The traditional bank has a lot of data, and things are changing. They're collecting data. But one of the challenges which I see is the thought in traditional banks or traditional players is still that data is our own, and that's of extreme value to us. And the openness to share that data is not there. There is a lot of intention of monetizing the data, but where a fintech, where a digital bank thinks differently is how to make it a win-win, an ecosystem. Someone might have transactional data, one might have balance sheets, someone has identity, someone can have good access to clients. And how do you bring that everything together, that not hold just one strength to oneself, but focus on what you bring the best? And I think that mindset change needs to happen much faster with a traditional bank.
Yeah.
Can I jump in there?
Yes, you may.
Very quick. Actually, there is a model that Ant is doing in China, okay, and financial. If you think about Jiabei and Huabei products, that's where banks and are collaborating with data on both sides to really deliver an incredibly seamless and powerful lending solution to consumers across all of China. And that collaboration and sharing of data is hugely powerful and successful.
Yeah.
But won't you agree that that was because it started off as a fintech, not as a traditional bank?
Yeah.
So I agree with Manish that it is all about a mindset. Because traditional banks have a huge portfolio of clients. So what is the uplift in that portfolio if I choose to collaborate with somebody else?
No, absolutely right. I was just going to add that as well. But Xiaoqian, you've had a few decades of experience in working with FIs and through Bain & Company and consulting with them, also with the new digital banks. Could you give us a bridge on how FIs and traditional FIs and digital banks could work together and, of course, towards that target of profitability?
Yeah, firstly, I feel like maybe Darren's a bit outnumbered on this stage, so I want to support him. And we do a lot of work with traditional banks as well as the new players coming on board, the digital banks, the fintechs. And I think the point around the incumbents having huge, significant strengths that they can harness, and it's really coming down, I think, to more internal issues around mindset and culture change. That is really the largest barrier. But once the incumbent banks, I think, get around that, actually the opportunities they have to actually really lead the pack is significant given the entrenched advantages. But back to your question, I think the difficult question here is around profitability. And I think that's a question that many people are asking. First, I think the facts, right? If you look at the world today, there are hundreds of digital banks. But if you look at how many of them are truly profitable, the sobering truth is you can count the number of profitable banks today on two hands, pretty much. And I think the fact is...
That might be even true of traditional banks.
Sorry?
That might be even true of traditional banks.
Well, there used to be more. There might be fewer today. But I think as we look at what makes a difference in banks being able to really generate positive financial returns versus those that are not for digital banks, it comes down to 5 major things. The first one is really the hygiene factors. I think we talked a lot about that. What is the reason for existence for some of the players coming on? What is it that you're offering that is differentiated, that is different from what's already available in the market? And the other hygiene factor is really around, have you designed really for a low operating cost? A lot of digital banks, you would assume, have designed for low operating cost, but as we look around the world, you find that even though they started off that way, over time, actually there's a lot of back office operations people that they have had to add as a result of the adding additional complexities of the business. So for example, in onboarding, you realize that actually a lot of this is exception handling and onboarding, and so you add more people to actually do more manual processes for onboarding, and you start to go down that slippery slope where the cost starts to escalate as well. So I think that's the first point around making sure that the basics, the hygiene of the business model, the operating model is properly thought through. The second one, and for us, I think it's really the biggest driver of success and profitability, is the point around scale customer acquisition. I think for any new bank starting up, that's probably the most difficult thing to overcome. If we look at the digital banks that are profitable today, actually most of them, almost all of them, actually belong to parent groups that already have invested over years in building that customer platform and building that customer ecosystem that the digital offerings can then ride on top of. And really you're amortizing the acquisition cost of customers over other products and services that the parents have built up, and then putting a financial product on top of that. And that makes a huge difference in terms of the path to profitability for the new player. So that's number 2, around the customer acquisition. The third point I spoke about is around customer experience, and I truly believe that if you do that well, that is going to be a huge success factor. And whilst digital banks, I think 90% of the time do that quite well, there are some still key moments of truth where that falls apart. And it becomes even more significant when it falls apart for a digital bank, because when your customer's in distress because they've accidentally made a payment to someone that they did not intend to pay, or they suspect there's a fraud happening in their account, or they've been locked out of your account. If you have more of a human or a physical presence, that's a sense of security for the customer, that I can walk into a branch or I can call someone and know immediately that I will be taken care of. But some of the digital banks haven't yet got some of those exception handling moments of truth episodes really ironed out, the 5%, the 1% of those situations. But if you don't manage those well, the detraction that you create, the reputational effect that has, I think is a big factor to think about. So the third issue around customer experience. And then the fourth part, obviously, is once you've got all of those pieces right, is around how do you monetize, right? This is the hardest piece. And the monetization, if we look around Southeast Asia in particular, I would say, and it's good that we're talking about SME banking, because I do think there's a much bigger, more attractive revenue and profit potential in SME digital banking than it is probably for the consumer digital banking space. But in the SME banking space, there's a huge unmet need from a lending perspective, and I think just tremendous revenue opportunity there. Our estimate is something like 10 to 20 billion of revenue in SME lending just in Southeast Asia potential for the banks to go after. And getting lending right is hard without losing your shirt. So I think, as the digital banks are thinking about how do I actually do that differently to be able to offer credit to customers that the traditional banks haven't been able to do for good reasons. And I think if you just look at a lot of the nice innovations outside, a lot of them are really around alternative data, alternative credit scoring models, new ways to access different types of information to build better credit profiles of these customers such that we can lend in places that traditionally have been more difficult, challenging to lend. And I think the points around, maybe riding onto supply chains, that's one great way to do that through your ecosystem partners where you have more transactional data. Riding on platform partners that you have is another great way to access more transactional information to do better credit underwriting. But I think that remains the holy grail, and I don't think anyone really globally has cracked that yet in a scale way to really push into lending.
So you brought some very important points, but I want to pick up a couple of questions and tie them down in 2 ways. So Sume, of course, your focus is on businesses, and you've just launched earlier this year, second half of this year. And Manish, you've just launched your services in Philippines. Your focus is consumers to start with?
Mass and mass affluent retail, which includes MSME.
Correct. And Karim, you've been in business for longer, of course, than both of them, but focusing on consumers first, the micro SMEs in some ways.
Yeah.
There are 2 aspects that I would like some of you to cover. One is picking up from the question, and this is important because customer experience is important. You talked about the back offices, we talked about technology in that customer experience. So how and when can digital banks gain the same level of experience as traditional banks? Is that even required? Do you see it as important? And 2 is, for Sume and Manish, you're just started acquiring customers. Customer acquisition is an incredibly important part, of course, of even beginning to turn revenue positive and then profitability much further down. How are you addressing that? Either one can get.
Let me take the first
Sure.
one then about the processes, right? I mean, you should not design your digital bank process based on a bank process. So if you do that, there is no need for back office at all. So our bank doesn't have a back office for onboarding. There is none.
So where do people call when they have a problem? They can't call anybody.
Okay, so I mean, let's get to that. Okay. So I truly believe two things. If you do the things right the first time, then your customer service will only add. So you need to focus on this as opposed on the second one. And therefore, you reduce your number of calling of your customers.
So you're saying you don't want the customers who give you problems at all?
Of course, if you have problems, it's actually an opportunity. But then you cannot have problems that you should actually be able to solve.
Okay.
Or it should be those that are not by design. These should be new things that you clear because you keep on innovating. You can then have new problems, and based on that, you can get input to make yourself better and better.
I'm sorry, I'm being unfair. That's true.
No, that is fine.
Sume, you've been at it for about 6 months since launch.
I think it's all about making the small changes. Banking is banking. You're governed by the same set of regulations, same set of rules to say this is how you know your customer, how you know your consumer, right? But how do you reimagine the whole process? In my experience in the past traditional banks, doing a KYB is extremely painful, right? You have a relationship manager picking up the phone or seeing you face to face and asking you like 20 pages of questions. Where do you get your money from? How are you going to fund your account? How many transactions are you going to make in a month? Right? Whether be it in terms of inflow, outflow, who are your counterparties, right? In a digital bank, we reimagine the entire process. In terms of answering the questions that a bank requires to get your account open, do I understand your questions as a consumer? So we try to simplify those questions. And those information that we can get from public sources, we will try our best to do that so that it's painless to the client, right? And questions to a startup in particular, and I mentioned startup because startups have the most pain, and in a way they are also known to be the underserved in the market, right? If you're going to ask me a question from day one, how many transactions am I going to have in a month? I wouldn't know. I wouldn't even going to know. I won't know whether I'm going to survive in the next 2 weeks. My concern is getting the business on track. And the only reason why I'm having a banking account is so that when my business is on track, I can collect my money.
Right.
Right? So that process can be shifted to the back end where your machine can help you monitor those transactions and having the transaction surveillance.
Right. Manish, I know you want to speak, but I want to go to Darren. Is what Sume said just exuberance of a brand new startup company, as she said? Will it last the test of time?
Any startup is difficult. Actually, you probably know the statistics from Bain. What's the proportion of startups that fail? Right? Across all industries, it's not easy. It is really, really hard. So I agree. Look, 6 months, it's probably a little bit too early. Yeah. And you need to see more of these digital banks. You think about the digital banks in Hong Kong and the licenses that they were granted. How successful have they been? We can say, there was a lot of excitement when the licenses went out. There was a lot of excitement when the digital banks launched. They've been not really quite so successful as everyone would have thought. They've been relatively limited in their product offerings. The scale that they've been able to achieve, the proportion of market share they've been able to achieve has been relatively limited. We will see what happens in Singapore, whether Singapore is different. But any startup, digital, traditional, or anything, is always challenging. But maybe I'd just make a comment also in terms of the sort of whole service capability. It is something that is quite emotional for people when they think they've got a problem with their money. When you think someone has defrauded you, you'll have all seen in Singapore many messages going out saying, don't do this, don't do that, these are concerns, etc., etc. If you purchase something and there's a problem, okay, maybe you can film, but when it's your money and you really think someone has got access to your account, that is a real moment of truth. Can the fintech, digital bank, or traditional bank, can they really meet your needs and reassure you, help you get your money back, help fix a problem, secure your accounts, these types of things? And no matter how much we digitize, let's take Techcombank in Vietnam. We are the most digital bank in Vietnam. We, again, have been voted the best digital bank by Global Finance this year in Vietnam. No matter how much more we put into digital journeys, digital capabilities, ease, convenience, etc., the single biggest message we get from our NPS, we want more branches. We've got almost 300 branches across the country. We don't feel we want as many as that, but our customers, we've got 10 million across the country, our customers keep saying, we still want more points of contact, and it's not because they go there. It's that sense of reassurance that if they need to, they can do. And that's a very important point that you were making. Can a digital bank really manage some of these more emotional things that happen outside of a core? Everything's a happy flow. Happy flow, everyone's happy. It's the unhappy flows. How do you manage them?
Manish, you're of course first targeting the well-heeled retail customers. Based upon what Darren just said, you will need a lot of branches, which you don't have, of course, right now. But if you want to make a comment on the earlier thoughts.
No, I want to make a comment on the customer acquisition piece, which you just mentioned, because what I'm going to say here may be probably a very controversial statement. I think this whole customer acquisition is a fallout of the startup ecosystem, and it's a bit blown out of proposition. And this is the mad rush in which, when we say 250 digital banks in the world, 243 are not profitable. Because I think the focus should be on your core business proposition first. How are you going to make money? Look one generation behind. You don't have to go to our forefathers. The basic starting point was, how will the business turn profitable? Right now, in the short term or in the medium term, not in 10 years. I know right now everyone is focusing on profitability and a huge song and dance about profitability because the easy money has blown out. But no one was talking about it three or 4 years back. So if you are able to put in a proposition out there, which again, as I said, which really helps your consumer, which is a problem waiting to be solved, and then you leverage it well with the ecosystem, your scalability wouldn't be an issue. But the challenge, the problem, what happens is most of the banks go into this issue of you start with a tech budget of say 10 million, but then you just get carried away and you have 50 or 60, 70 million just to build the tech, and then you spend another 50, 100 million on customer acquisition, and then profitability just keeps looking like a fleeting target. Yeah. On the other point, very quickly on customer experience, a lot has been said, but absolutely critical, and I go back to the point which I made earlier, that why we chose to invest in a contact center, still human-based. We consciously took a call that at this stage, we are not going to put a bot. Yes, when we scale up, bot will come, because it is very, very important about that whole customer experience. The people need to be assured that 24/7, I have someone there to talk to me, either on chat or on phone if I need something. Because you are just uprooting the journey from a physical branch to completely a faceless app.
Yeah, no, thank you for that. Xiaoshen, how important is ecosystems to prop up the proposition or the profitability of the digital banks?
Yeah, I think everyone's spoken a lot about ecosystems, and to me, I think the strategic partnerships is absolutely critical ingredient to success for both traditional banks and for digital banks. I think, partnerships for several things. One is for customer access, and we see, for example, large corporate anchor conglomerates that work with banks to provide their supply chain, their distributor chain to do working capital financing. That's a great way to access customers with better information and flow. Partnerships for access to new solutions that your company might not be able to provide. So I'll give you an example. In the SME space, a lot of the SMEs, actually, they don't really want to deal with many different providers. They're focused on growing the business and making sure the business survives. And if you can provide a solution which takes care of a lot of the day-to-day admin and pain points for them, that is a real winner, right? But banks don't have all the solutions, but how can you partner with other providers that might bring these things and you can integrate that for the SME? And one example is, for example, for restaurants, right? If you look at a restaurant owner, that person needs an inventory, ordering, management, payroll, delivery system, restaurant reservation system. And in Singapore now, when you take a reservation, you also take a deposit from your customers, So how can a bank, together with non-banks, actually stitch together that end-to-end solution for the restaurant owner? And if you can actually do that, it's a very sticky customer relationship that is going to be very difficult for the customer to actually switch to go work with someone else. So to me, I think, the partnership point, if you can do that well, is critically important. But at the end of the day, I think the thing that makes it difficult for partnerships is increasingly we see the value and the negotiating leverage shift to players that actually have that customer relationship and the customer engagement, and they then become the ones that actually get a disproportionate share of the overall economic surplus. And many times, actually, the new players, the digital banks, actually are not the ones that have that, and so you end up having to give quite a lot of that value away to the partners who do own those customers.
Yeah. So actually, you bring up a very important point, and we don't have a lot of time left, so I want to summarize that very quickly before I go to last comments. But SMEs do not have the capability to put experts on every part of the business, and they need a more holistic approach, and that's where the ecosystem plays an important part. Unlike technology companies applying themselves to large enterprises, where if you do one thing right and one thing right, very narrow and deep. Kareem, I want to give you exactly a minute and a half to 2 minutes. So if I understand correctly, Jago Bank was created out of almost like a reverse acquisition. Did you have to throw away technology in that? 2, you've just done profitability in several quarters back. Could you speak to it for a few minutes?
Okay, thank you. Quickly. Well, we didn't actually touch on the legacy, so it's not a transformation. We built everything from scratch. Right?
So you did throw away everything?
No, yes. Because we just needed the bank license and then built the new digital bank. Now, on profitability, I think banking clearly has to be based on sound principles. Principle number 1 is what everybody here is saying, focus on the customer. And that's why we said life-centric. All our processes were based because we are traditional banks. I'm not saying that because you keep on improving a process, right? But with technology, you can improve your processes faster and easier. But the second one, this question about profitability, I mean, all digital banks can be profitable tomorrow. Why not? The question is because everybody as a digital bank has to choose between growth or profitability. And everybody actually chooses growth. And therefore, banks then become not profitable. Now, Jago, in the beginning, since we are bankers, mostly bankers who build it, we understand that to be profitable, you need revenue. And therefore, the focus is actually, which is not much being touched upon, is on the lending side. Yes, we built Jago, which has good customer experience, easy, life-centered, but it doesn't give you any revenue. So we're focusing also on partners in digital ecosystems who provide lending. So at the moment, we have like 34. And then this is, I think, on the digital side, which is not much touched upon, and therefore, the path to profitability, I do believe that it has to be through building the lending book.
Yeah. So one thing to note also is the fact that you talked about AWS. The fact is it's one of the top 10 capitalized companies in the world, but for the better part of 2 decades, they've been non-profitable. So perhaps we're being too hard on each other as well. So we have come up to the last minute. I wanted to give each one of you just 10 to 15 seconds. If you had your way with the newspapers tomorrow morning, what would be your headline that you would cherish? Anybody can go first.
Digital banks are here to stay.
Okay, that's a good one. Darren?
Oh gosh, what we cherish. Techcom Bank again, recognized by its customers as being the leading bank in Vietnam.
That's very self-serving.
I know.
I will go even more aggressive than Kareem, but digital banks are the future.
Okay.
I would say co-opetition across the players have created new innovative solutions that are good for our communities.
Ecosystem play is the route to profitability for digital banks.
Yeah. Some of these people will make it in the comms teams for sure. But one aspect we didn't touch on today, and it's not something we can solve in 40 minutes, is open data, open banking in many ways, because that's almost the ideal in terms of taking the best of both worlds. But that's something we will leave for the future. So join me in thanking the panelists for their frank thoughts.
Thank you, Saurav.